Hi, this is Johnny, your friendly local realtor, here to bring you the up-to-date housing market report for January 2022. There are lots of events happening in the market right now, and this brings many speculations about how the mortgage rates, inflation, Fed's next plan, and the new COVID variation will impact the real estate market. But one thing is for certain is that it's the inventory that will determine what will happen in the housing market this year. We're going to look into this today as well as other important points, so let's jump right in. We've had few record-breaking events happen recently in the housing market. Two of those are record low inventory and interest rates, but the thing that people aren't talking about as much is the record high equity gain and its accumulation. Please take a look at this CoreLogic's third quarter homeowner equity report. This is the latest report I was able to procure. We've had $57,000 average home equity gain for homeowners with mortgages as of the third quarter last year, which equates to 31.3% gain. Now, this is a tremendous amount of equity gain, and this number is continuing to grow right now. And this calculates to a total of $3.2 trillion year-over-year gain all across the US for homeowners with mortgages. CoreLogic also stated that in 2021 summer, home price growth reached its highest levels in more than 45 years, pushing equity gains to another record high. And if we look across the country, the national average equity gain for third quarter year-over-year is at $56,700, and the states that had the most gains were in the West, California setting the highest gains at $119,000. And if we look at our state of Georgia, we had $50,000 in average equity gain, which is a little lower than the national average. That was the equity gain, but how about equity accumulation? Let's take a look at what Odetta Cushy at First American said. U.S. households own $36.8 trillion in owner-occupied real estate, $11.5 trillion in debt, and the remaining $25 trillion in equity. In inflated adjusted terms, homeowners had an average of $294,000 in equity in third quarter 2021, a historic high. This is absolutely unreal. Of course, this average is different in different parts of the country, but an average homeowner in the US currently holding $294,000 in equity gives them more opportunities and freedom of choice. Now, in the midst of pandemic in 2020, when we were about to face recession, I've mentioned that the equity that we had will allow people to weather the current situation much better than the 2008 housing crisis. And no doubt this happened. Because Frank Martell, president of CoreLogic, said, not only have equity gains helped homeowners more seamlessly transition out of forbearance and avoid a distress sale, but they've also enabled many to continue building their wealth. And speaking of forbearance, this is the latest information procured from Black Knight. As you see in this graph, last month in December, forbearance numbers finally fell below 1 million. So this 890,000 mortgages are still in active forbearance, and this number represents about 1.6% of all active mortgages. And 4 out of 5 people are currently coming out of the forbearance with workout plans or paying off their back payments. Now let's move on and talk about inventory, because inventory will be the leading indicator to what we'll see in the housing market this year. And this is how Bill McBride at Calculated Risk puts it. It is possible that rising mortgage rates will slow the housing market, or the Fed might raise rates sooner than expected due to the recent pickup in inflation. But I believe one thing is certain: inventory will tell the tale. So how's the current situation with inventory? Well, here's the reality. The listings are at record low right now. Over the couple years, low rates, people's needs for a home, and desire to own a home has depleted housing supply all across the country. And I've covered this extensively in the past. And this is what current inventory looks like graphically. This map indicates the inventory change from December 2020 to December 2021, a data by Realtor.com. And as you can see, other than Idaho State, the inventory is down all across the country, mostly somewhere between -15% to -30%. And if you look at Georgia, we're at -22%, and this puts national average at almost -27%. No doubt a significant lack of inventory across the country. Now, if we take a look at this graph, we can get an idea as to how we're starting off 2022. This is the data by NAR, and it shows the inventory every month since January 2019. And as you can see, we had a dip down in the earlier part of 2020 due to COVID lockdown, but that number spiked back up after the lockdown in April and May. But ever since then, the inventory has been falling. We did hit the highest points in August last year, but that number again fell towards the end of the year. So you can get a glimpse of where we're starting this year with record low inventory. But now, how's the buyer demand? Will this lack of inventory put out the fire? If you look at this latest data by showing time, people wanting to look at homes are still very high. Actually, that number has gotten higher if you compare last year's November to a year ago. And let's take a look at this graph representing last 5 Novembers for people wanting to look at homes. You can tell by looking at this graph that current buyer demand is crushing pre-pandemic numbers. If you compare 2017, 18, and 19, which is often referred to as last normal market, to 2021, you can see that the diminishing inventory is not deterring buyer demand. And this is what Michael Lane, VP at Showing Time, said in regards to this. Showings traditionally lag during the holiday season, but the data we're seeing tells us that buyer demand remains strong. The fact that every region showed a year-over-year increase indicates that buyers are undeterred. It speaks to their desire to keep searching for their next home. So knowing all this as we enter 2022, we can see how fierce the competition will be in the beginning part of this year. Of course, many experts are projecting that we'll see more inventories coming in this year, but knowing that both home prices and interest rates are on the rise, buyers are not going to want to wait. Now, let's take a look at what we should expect for this year. This is the latest mortgage projections from Fannie, Freddie, NAR, and MBA from first quarter to fourth quarter this year. And as you can see, if we average their projections, we're about to see mid 3% during the middle of the year. Of course, we'll see the rates undulate throughout the year, but it will ultimately be on the upward trend. And lastly, as far as the latest home price forecast, these 7 experts are projecting anywhere from 2.8 to 7.4%. If we average their projections, it's about 5.2%, but basing on what we're seeing so far in the housing market, I believe we're going to see higher appreciation than that, because these experts have already started up-leveling their forecast. So lots of things are happening in the real estate market this year, with rising interest rates and home prices, along with ongoing battle with pandemic affecting the entire market. But overall, it's going to be another strong year for housing, with sales continuing to rise, and I believe we have very good possibility to reach 16-year high in 2022. I'm going to end here today, and hope the information that I covered will help you in making that important real estate decision. See you again next month. Goodbye.